Give us more analysis and perspective as to what's taking place from a global perspective. I'm now joined in our Cape Town studios, or in Cape Town rather, by Graham Bell. He's a strategist at Old Mutual Equities. Graham, always good to speak to you. Let's pick up though on the US Fed. Will they raise interest rates or won't they? And more importantly, what will the big impact for the global markets be if they do?
Hi Gugu. Yes, well, we finally reached September 2015, the great date when the Fed is supposed to hike, and the degree of certainty about whether they will actually hike has been wavering, and in fact in the interest rate market I think the probability has slipped to as low as a 30% chance of an actual hike in the announcement tomorrow. Should they hike? Will they hike? What will be the impact? My own feeling is that they should hike. They did give some guidance, a meeting back where they pointed to the labour market as being an important guide, and the labour market has come up with a whole slew of very positive numbers across the board. Small businesses, the overall job openings data, the payrolls data, and so on, all of which indicate, other things being the same, that the Fed should hike. But there was one small spanner in the works, and that was the performance of the Chinese economy, particularly once the Chinese announced that there was going to be a wider band for the exchange rate, and there was that devaluation that had sent ripple effects through particularly emerging market currencies, and a lot of them sold off. And there are worries that China may be in a recessionary phase. Even some people have gone to extremes in saying that Chinese growth rate is as low as 0, and a lot of worries have emerged because of that. And the Fed must take that into account to a certain extent. So it's one thing saying what I think they should do. The other thing is what I think they will actually do. I'll go for a hike, but I could be wrong. I think the most likely thing is outcome is a hike, but very strong guidance about the trajectory of future interest rate movements. As you know, we've talked before, the Fed's own members have a sort of series of forecasts which range quite widely, but the average of those forecasts for rates for the Fed funds rate going out for the next 2 or 3 years is really quite high. And I think there's a pretty good chance that that will be moderated, so that the market will see that the Fed is doing something. Remember that even if they do something, the rates are still extremely low, historically very, very low. And if they guide to a fairly modest trajectory, a low trajectory, guided by data, so the data doesn't come up to expectations and they'll stand back and wait, then I think the market will actually heave a huge sigh of relief, because finally they've started the move, but they're not going to do anything too aggressive.
Well, we're not only worried about what the Fed will do, but more importantly also what the Bank of England will do following the economic data we saw out of the UK today, showing that there is a slight increase in wage inflation. Your thoughts on that, Graham?
Yes, you mentioned that in your preamble, and the earnings data was up at 2.9% year on year, which is, as you say, one of the strongest readings for some time. And also, if you distill it down a bit, in the private sector, the rate of increase is up over 3.5%. So it's actually the public sector where wages are still very, very muted. And I think the Bank of England has no choice but to take notice of this. Of course, yesterday we did see the CPI number in the UK come down, especially at the headline level, and that's because obviously the oil price has been coming down, so that feeds through very sharply into CPI directly. But that, at some point that will stabilize. So we've really got two major central banks heading for hikes. I think the Fed first. I say we'll know tomorrow that there'll be a hike. Maybe it's only going to be October, and maybe even December. I think it's a great deal of uncertainty about it. And then I think the Bank of England won't be too far behind. What that means for markets is volatility. If you go back through history, every single period where rates have started to be hiked in the US, equity markets in the months running up to it and immediately around that hike, the equity markets have been very volatile, and we've already seen that volatility in the last few months. The VIX index has spiked up very sharply. So I expect that to continue. But as I say, I think if they do it and they guide to a fairly modest rate of ascent, then there will be a huge sigh of relief and the markets will recover from the volatility and will move ahead.
Tough call either way you look at it, right, Graham? Uncertainty is clearly the name of the game. A big thank you to Graham Bell, who is a strategist at Old Mutual Equities, joining us today, updating us on the global markets.